3 worst reasons why Bitmine can drop over the next couple of weeks. We will talk about seasonality. We will talk about the all-time highs. We will talk about the most important reasons and the mindset that you should have when the stock is falling. And also, obviously, why this is maybe your very last dip buying opportunity.
Welcome to the game, I'm the wolf of Dubai.
Welcome to a brand new video, and my name is Danny if you don't know me, because 43% of my viewers are actually new to this channel. Then make sure to smash that subscribe button, not only here on my second channel but also on my main channel as well. My early subscribers actually bought houses and apartments in the US, so it's very good to be subscribed because we are looking for stocks that can go x10, x20, x30% up. And I was early on Tesla when it was a $17 company. I waited everything out until it was 6. I was buying and buying and buying. It was very stressful sometimes in the very beginning because I put my life savings in, which was maybe not the smartest decision, but in the end changed my life completely. And you know, the next big one that I'm talking here on this channel is Bitmine. Okay, we started to talk about on my channels in about, like, you know, when it was at around 30, so it's almost a double now. And now we will dive into extenddaytrading.com, which is my own product, my own group, where I trade for you. Our team trades for you with our software called the AutoPilot, which looks like that. Very simple. You just switch it on. Everything is done for you into your portfolio. If you want to check it out, schedule a call with me personally, and we will check if you are eligible to join us as well. You need at least $10,000 or more to get started, but then you can join us and we can trade for you. Now, let's dive into the 3 worst reasons why Bitmine is dropping. Every single time Bitmine is a little bit weaker, I get the same comments, messages, email, why Bitmine is dropping, okay? And I always feel, and maybe this is my experience because I'm already 22 years on the market, I only think like, how can I explain it in the most simple way? Because what I want to explain is, first, is totally normal. Second, those are the reasons. And third, this is a huge buying opportunity, okay? Let's start with the number 1. It's totally normal. I don't know, maybe this comes to a surprise. I know people are surprised, very surprised, that stocks do not go up 100% of the time, okay? I know it's a big reveal. Spoiler alert, stocks go also down, okay? Stocks go up, stocks go down, stocks go up, stocks go down. That's why the chart doesn't look like that, but the chart looks actually like that, okay? That's totally normal. It has something to do with seasonality, with the stock itself, the company numbers, the company news, everything is connected to the stock price. So don't get too much focus on the stock price, be more focused on the company itself, because this is what is important. If the company doesn't do well and the stock price go down, then avoid this kind of company. But if the company does well and the stock price go down, then this is a huge opportunity to purchase, okay? This is the best time to purchase actually. And I think that this will be the last time to purchase as well, okay? So let's dive into the reason number 1, the worst reason why Bitmine will drop and can drop more from here. Guys, and it's not so bad. I don't know why some people cannot get used to it, okay? So if we are looking into the 1 month chart, right, we saw like a great rally from about 40 to about like 60 something, right? 50% increase. And since then, we lost about, let me see, 16%. And I'm sure we can even revisit like 45 levels, okay? So maybe we get another, you know, 10% drop or so, or maybe even we revisit 40. That would be absolutely phenomenal, okay? Because I'm buying every single day. Like yesterday I bought this, and the day before that I bought this. So, you know, you can see I'm buying every day between like $10,000 worth of Bitmine shares, right? So I don't care. I'm very happy because I'm thinking that I'm buying every single day a $500 stock in the next 3 years for just 55. That's the mindset that you should have. And then, you know, if you have this mindset, then everything is cheap for you, okay? But you need to have this 3-5 year mindset. Most probably will come much faster than that. This is my personal opinion. Like I always say, like, oh, I would love to see Nvidia. You remember the Liberation Day in April? You know, let's have a look. So Liberation Day in April, okay? One of the biggest drop over the last couple of, you know, months, okay? Let's have a look. So for example, Nvidia. This was the drop and everybody thought the world is over. And since then, we gained 90% in NVIDIA. Let's go into Hood, which was even maximum amazing for my portfolio. So here you can see in March, we were at like 34, and just April, May, June, July, August, September, end of September, let's say 6 months, and we made 300%. So you can see these things happen much faster, okay? But you need to have this mindset. Most people were super scared when the stock went from 60 to, 34, but that was just a huge buying opportunity. And I think like Bitmine is the same, okay? So let's go back to Bitmine and actually see that Bitmine, if you look into the last month, it's not a big of a drop in any way, okay? But this is the normal seasonality, okay? When you look for the whole year, you will actually see that stock market has seasonality. This is reason number one, okay? Stock market seasonality, crypto seasonality. Both things are important for Bitmine, okay? So usually October is the worst month for crypto and for stocks. Here we have the chart of Bitcoin seasonality. As you can see, the October of the last couple of years was not so great. This is also, everything seems to be very volatile and going down in October, okay? There can be many, many reasons. They will find reasons. So that's number one, okay? Second reason why we might go down. The whole stock market is quite on an all-time high. But the issue is that the all-time highs on Monday were achieved because of great news by NVIDIA and also by many, many stocks being actually down, which is actually a sign of a temporary top. So if the market goes down, right, then obviously guess what happens to growth stocks? They going quite down. And you can see also usually that crypto is one of the most telling early indicators what can happen to the stock market, because crypto is also a huge risk asset, right? So usually crypto is sold early, then the stock market follows, and so on and so forth. So that means that actually on Monday we had the huge, almost wanted to say crash, the huge drop of 7% in Ethereum. This was market telling that market had the all-time high because of NVIDIA news with OpenAI and so on. And then, Tuesday and Wednesday, we close a little bit lower, right? So we will see how the rest of the week will be, but the volatility in this time of the year is totally normal. So and before we diving into the last reason, I want to make sure that you get some wisdom, okay? And before you get the wisdom from Peter Lynch, I want to show you also that you should check out x10daytrading.com if you want us trade for you, all done for you with our software. Absolutely, you just have to switch it on before the market opens. You get all the trades all automatically. So check it out, x10daytrading.com. If you have $10,000 or more and schedule a call with me personally, the first link into the description, first link into the comments, check it out and schedule a call for the next couple of days. Okay, now I want to show you a clip of Peter Lynch, the big billionaire and legend mogul of Wall Street. He's telling you a little bit about falling stocks and what you should think about. Okay, here we go.
Okay, now we'll get to the important stuff. There's always something to worry about. And, this is the difference. This is what happens in the stock market. Because, see, everybody's got the brain power to do well in the stock market. The question is whether you have the stomach for it. That's the key organ in the body. There's always something to worry about. I went to school, grew up with a kid in the 50s. In the decade of the 50s, there's this big theory that the Depression was caused by a stock market crash. Totally wrong. Less than 1% of Americans owned stocks in 29. We had this big time recession. In fact, it was a depression. It wasn't caused by the stock market. The economy went down, the Federal Reserve raised interest rates, we had a big time depression. In fact, we had several depressions like that from 1850 on. This was only one of about 8 depressions since 1850. So people weren't buying stocks in the 50s because they thought that another great depression was going to happen. In addition, people were very scared about nuclear warheads and nuclear war in the 50s. People were building fallout shelters, stocking canned goods. There's something about going to Vermont, building a fallout shelter, putting canned goods in it, that you don't buy Minnesota Mining or you don't buy Eastman Kodak. The syllogism just doesn't work out that you're buying lots of water, buying a shotgun, buying frozen food that will stay in the freezer with your own generator, and you're looking at growth stocks. Doesn't seem to work out that way, But people were worried about a depression and nuclear war in the 50s. And then, the warheads, they couldn't do much damage back in the 50s. Now one of these stand countries, these Kakistan and Kazakhstan, all these stand guys that have spun off these Friedman Billings spin-offs from the Soviet Union, every one of these little countries has enough warheads to blow the world up 88 times. Who's built a fallout shelter there, We stopped worrying about it. I mean, there's always something to worry about. In the 50s, it was depression and nuclear war. The 50s was the best decade this century for the stock market, except for the 80s. Only slightly better. The 80s were only slightly better. People didn't expect a lot. We had an okay, it wasn't a great decade. They just didn't expect much. We made it through. And the stock market was terrific. Do you remember when oil went from 4 to 40? Remember that period? Oil went from 4 to 40, and the experts said it was going to go to 100, and all the countries of the world were going to go bankrupt. And the big banks were going to go bankrupt, and we're going to have a Great Depression, and the stock market was going to go down. And I remember when the money supply was growing too fast, and they said we're going to have a depression, then it was growing too slow, we're going to have a depression. Then the Mideast was going on the world, remember that one? The Mideast was going on the world, they weren't going to buy our bonds, and the market crashed, and we're going to have a depression. Then Japan was going on the world, remember that one? Japan was going to have all the assets, and they weren't going to buy our bonds, and we're going to have a depression. Within 3 years, the Nikkei Dow had gone from 40,000 to 16,000. The banking system was in trouble. And people said Japan was going to collapse and we're going to have a depression. You know, commercial real estate, global warming, you know. And I think it's the older you get, the more nervous you get about these things. I think it's very valuable. I think while younger people are better investors is they're not worried. They haven't heard about all these crises. And they're with children. I think if you don't have any kids, you got to rent some kids for the weekend. You know, get a 7-year-old and ask him if he knows about the money supply, you know, how fast it's growing. Ask him if he knows about the shape of the yield curve is the wrong shape of the yield curve. You know, ask an 8-year-old if they know about that. 8-year-olds have a very high expectation about the next 20 years. That's what you need to do. The more you get away from 8-year-olds, the more you get away from 11-year-olds, the more you start reading these crazy things you read over the weekend. In fact, from 1955 to 1985, the stock market went up a grand total of 1,000 points, but it was down 800 on Mondays. So it was therefore up 1,800 on non-Mondays. It wasn't an accident. The stock market went down October the 19th, 87 was a Monday. People over the weekend become economists and portfolio strategists. You know. So I don't worry about that. I know we've had 96 years a century, and the market's fallen 53 times. We've had 53 declines of 10% or more. So 53 declines in 96 years. Once every 2 years, we have a 10% decline. Of the 53 declines, 15 have been 25% more. So 15 in 96 years, but once every 6 years, the market falls 25% more. That's what we call a bear market, you know that. And it's going to happen. I don't care when it's going to happen. I would love to know. Obviously, it would be very useful to know when it's going to happen. It doesn't make a difference to me. Corporate profits will be a lot higher 8 years from now, a lot higher 16 years from now, a lot higher 30 years from now. That's what I deal with.
So the last reason thing is something that when something doesn't fit the norm, then maybe the norm will come in a much bigger fashion. Which means September, as we know from the seasonality chart of the stock market, is usually a weak month. But it was very different. It was not a weak month, it was actually a strong month because the Fed was cutting the rates, you know, everybody is exciting that the stock market goes up. So, you know, everybody was buying in September. So then end of September, where we are now, could have the effect of September in general. And then you can have a very, very volatile, very, very weak October, okay? Everything, the seasonality will catch up, right? So the October might be even worse than we think. So be ready. I think this is only the buying opportunity if you can get Bitmine for 45, for 40, even 35, 30. I don't know where it drops. And I don't care because I'm buying every single day. I know you don't have maybe the amounts that I have, but make sure to maybe, you know, do like $100 steps or $50 steps, whatever is good. You don't put everything at once and wait and say, oh, you know why it's going down, I'm down, whatever. So make sure to make also your own research. This is never financial advice. I'm looking forward to see you tomorrow for a brand new video. And remember, the grass is greener on the other side.